I'm looking for, I think the best case scenario is over 40, but let's say I'm wrong and it gets all the way to 50. Many of my friends think it's just going to go through 50 like a hot knife through butter, the old cliche. It may, but I have a hunch it's going to stall out at 50 and then consolidate and maybe come back and go through it. But that could be. So you could see it go up. The paper game gets played out to however it's going to play out, reestablish a base, or maybe just touch that 135 and right back up. And we get to 40. And then let's say it builds a base from 42 to 39 for months. And that's my old adage, silver will either scare you out or wear you out.
The fundamentals continue to support what technical charts have been signaling for months. Silver is under immense upward pressure. Industrial demand hit a fourth consecutive all-time high in 2024, while global mine supply remained largely stagnant. The result is a historic supply deficit that cannot be ignored. In 2023 alone, the silver market experienced a 148.9 million-ounce shortfall. Over the past 4 years, cumulative deficits have reached 678 million ounces, equivalent to nearly 10 months of global mine production at today's pace. This persistent imbalance has compelled industrial users and investors alike to draw on above-ground inventories to meet demand. With fresh supply unable to keep up, basic economic principles suggest that higher prices are not just likely, they're inevitable. Silver bulls are increasingly optimistic, interpreting the recent breakout as the beginning of a larger upward trend. DavidMorgan, widely known as the silver guru, notes that despite weak retail demand, silver prices have been rising, not due to physical buying but because of movements in the derivatives market. The price action is being dictated by paper contracts, which are driving the market higher even in the absence of large-scale physical accumulation. Unlike gold, silver has not been favored by central banks, which have been purchasing massive quantities of gold amid waning confidence in traditional reserve assets, such as U.S. Treasuries and the dollar. This has left silver initially overlooked, particularly due to its dual role as both a monetary and industrial metal. Silver's industrial nature can weigh on its price during economic slowdowns, unlike gold, which benefits from safe haven demand. Yet despite these headwinds, silver has recently surged, driven partly by short covering as bearish traders rush to close positions. DavidMorgan cautions that this boost is temporary, noting that long-term gains will depend on core fundamentals, such as the ongoing supply deficit and silver's undervaluation relative to gold. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
The situation is rather bizarre. The wholesalers are just inundated with inventory. In fact, you could go to a friend of mine's website and you could buy constitutional silver, known as junk silver, in the trade for 70 cents under spot. That's the price you could buy it for as a retail investor. The wholesalers are doing whatever they can to try to offload inventory because they've got to make a two-way market. And so if someone sells, make up a big number, $10 million worth of silver, some of these wholesalers don't have that much ready cash, but they have credit lines. So they borrow the $10 million, they buy back the silver, and now they've got, 4% interest rate. So not only do they buy it back at maybe a discount to spot or maybe at spot, but now the clock is ticking because as like a car dealer, the longer that car's on the lot, the longer those bags of silver or silver bars or silver coins are sitting on the shelf, the more they've got to pay an interest cost to hold them. So they want to get rid of that inventory. And the retail market's dead. I mean, dead's probably not too strong a word. And yet we see the price going up and up and up. And that's to prove really that it's the derivatives market that we're watching. We're watching what the price of a paper contract is in silver or gold or platinum for that matter. And there's a huge push that is really killing the shorts. I mean, a lot of this rally has been short covering. And so, where's this going to end up? And, I know how it ended in 2011. I mean, I'll tell you ahead of time. Basically what happens is the smart money, if you want to call them that, the bullion banks, the commercials, the people that really know how these markets operate because they are operators of these markets, they will get to a point where they're caught short. And it happens very rarely. What they'll do is they will step aside and they will not basically put on any contracts. I'm using a broad brush here. It's not exactly this, but it makes the thought process more clear. So they step aside and don't do any shorting. And so now the market's driven by the funds and the retail market. So now it'll exhaust without them in participation of it. So now the price goes higher and higher and higher, but there is no retail buying, but there's some. but very little. But the the trading funds may be buying, but eventually it'll exhaust. So they wait for it to exhaust, and then it'll start to come down. Now, since they can print money to infinity, once that momentum starts on the downside, they'll pound it. They'll come in and start selling like crazy, knowing that that momentum has changed in their favor, and then they'll start to really. So now what happens is the funds will have to start exiting, probably at a profit. Let's say they're long at 35 and price goes all the way to 42 and then it exhausts. Then at 42, the banks know, okay, now we've got momentum has changed. We could start shorting. So short at 42, it goes down to 41. Short more at 41. The bank was in at 35 and now it's at 41. So let's take a profit here, which is more selling. Selling on top of selling. The banks are shorting and the funds are long and they're selling to get a profit. Those trades have to match. If somebody wants to buy it at 41, there aren't many people. In fact, there are none. No one wants to buy it at 41 on the way down. They'd love to buy it at 41 on the way up. So now what happens? The next match is $38 the ounce. I'm exaggerating for effect. So that's where you get the gap in the chart. So no one wanted to buy it at 41, but a lot of people wanted to sell it at 41, but they don't match. So now the next match is at 38. Again, I'm doing it for exaggeration, but that's why you get a gap in a chart. Happens in corn, happens in wheat, soybean oil, cotton, cocoa, doesn't matter. It happens in the commodities markets. But this is what drives me nuts as far as the futures markets, and I'm not against them. I'm just against them being used in the manners that they've been used. And it's not just in silver, although silver's the stellar example. I mean, there's more paper shorts in silver versus the actual reality of the physical market than any other commodity by far. In fact, it's in the metals by far. But nonetheless, am I predicting, a big sell-off at 42? No, I'm just outlining how the futures market works and why you don't want to get too excited if you don't have that retail pressure on the market. Now, let's look at the other side of the coin. And actually, the most important side is investment demand. That's the swing factor. That's what is ebbs and flows. That's what makes a market a hot market or a bear market. It's the margins, the people that buy silver for investment. But 60% of the market is industrial, and that doesn't go away. It can ebb and flow, but mostly it's pretty steady, and the trend is clearly higher and higher. So that demand is out there. But as far as my long take, and I'm looking for, I think the best case scenario is over 40. But let's say I'm wrong and it gets all the way to 50. Many of my friends think it's just going to go through 50 like a hot knife through butter, the old cliche. It may, but I have a hunch it's going to stall out at 50 and then consolidate and maybe come back and go through it. But it's tough to look at all aspects of the market. And if we had investment demand, if retail wasn't buying and they're not, but institutions were, and they're coming in and this big pension fund bought $50 million worth of silver, and another pension fund bought, $200 million worth of silver, and hedge fund came in and bought, 50 million ounces or something. If those things are happening, I'd be much, much more confident that, we're going much, much higher very quickly. But until this short paper situation is resolved, which as I just explained how quickly it can be resolved, I'm just going to hold my positions. I'm not going to add. I'm just going to wait and see. I mean, I really would rather give out news and tell you the institutions are coming in hand over fist like the banks have in the gold market. Silver doesn't have that luxury that it's considered to be a monetary metal by institutions. It's sort of the mavericks. It's the one-offs. It's the free market thinkers. It's the people that can think on their own or are willing to take, let's say, a higher risk for a higher reward, because that market is much smaller than the gold market.
Silver is finally showing real momentum after years of trailing behind gold. The metal began 2024 at $23.99 per ounce and ended the year at $28.91, registering a substantial 20.5% gain. However, it's in 2025 that the story has taken a more dramatic turn. In just the first half of the year, silver has surged more than 50%, recently breaking through the psychologically and technically critical resistance level at $35. It climbed as high as $36.49, levels not seen since 2011 when silver came close to its all-time high near $50 per ounce. This kind of breakout has caught the attention of traders and analysts alike, signaling the potential for a much broader move. While some profit-taking has caused minor pullbacks, silver has managed to hold above $36, a sign of resilience and continued bullish sentiment. The ability to sustain gains above a key resistance level typically indicates that market participants see room for further upside. DavidMorgan remains cautiously optimistic. He acknowledges the strength of the current move, but notes a critical caveat. The rise has not been matched by strong investment demand. Without a significant influx of investor interest, a climb to $50 could be short-lived or unstable. While industrial demand remains robust and steadily growing, mainly due to its use in green technologies and electronics, it may not be enough to sustain a long-lasting bull market on its own. Let's get back to the interview.
And let me just confirm that a bit. I mean, we could get up to, let's just be really conservative. Let's say just get 40. And then it backs off and it builds, and then it gets sold off and the banks get to cover their shorts and they're happy and they make money on some of their trades. And let's say it settles in at, let's just say 35, the breakout point, which is not unusual. A lot of commodities, once they make a breakout, they'll retest that breakout for a very short time and then start back up. And that could happen fairly easily, in my opinion. And so that wouldn't really hurt too many silver bulls unless they're leveraged. And they're over leveraged or whatever. So we could see that. And then, UBS knows that the equilibrium price based on silver, which is not the retail market, which I talked about so much, but how many silver bars are in inventory for investment or in industry. And that count is going down because those commercial bars are being used for solar panels and all the electronics and everything else. So that's been in a deficit for 4 years. So they're looking at it from that perspective, and they're kind of ignoring what the silver stackers are doing, because that's really, truly the silver market. It's a paper derivative market based on 1,000-ounce bars. And they say, you know what? The equilibrium's around 40. And they would know, probably more than me. I mean, I'm not a know-it-all. I'm a learn-it-all. I certainly don't know everything about the silver market. But that could be. So you could see it go up. The paper game gets played out to however it's going to play out, reestablish a base, or maybe just touch that 135 and right back up, and we get to 40. And then let's say it builds a base from 42 to 39 for months. And that's my old adage, silver will either scare you out or wear you out. You either get these huge moves up and down that scare the crap out of you, depending whether you're on the right side or the wrong side. And then it'll go sideways for so long you just get bored to tears. I just wish I never touched silver. I haven't lost any money. I bought at 35, but it's trading between 38 and 40, and it's not enough profit for me. I want it to break above 40 before I even want to think of selling. It's the way the game is played, and it is a paper market. It's a derivatives market. The price you see on your screen, can you go buy physical for that price? No, you're going to pay a premium to a dealer. Even if you take it off the exchange, which is the cheapest way to buy it, you're going to get 1,000-ounce bar. Is that really what you want? But let's say it is what you want. You're still going to have to pay for transportation. You're going to have to close out the contract. There's some fees involved. It's not going to add a lot to the price. But in some cases, the exchange say, we don't want to mess with 5 bars to Mr. Morgan. You got to settle in cash and send me a check with a note explaining contract that I signed said I would agree to settle in cash, even though I stood for delivery. It's too much faster. I've gotten a few of those over the years, Patrick, where I stood for delivery. My broker was hating me because it's a pain in the butt, but they did it for me. I ended up not getting delivery anyway. I got this check and this explanation. Wow. Now, I'm not saying it happens all the time, and we're talking 5,000 ounces or multiple. So the guy's very wealthy, and he got 10 contracts or 50,000 ounces of silver for an individual, and they didn't get delivery. That's nothing in the realm of how much silver gets marked to, different accounts every delivery month and even the non-delivery months. And what's interesting about those big moves of physical, it's really tagging a bunch of pallets on this side with a different bank name on it going over to this side. A lot of those are really dealer swaps between each other. But there's a lot more movement in silver on the COMEX than there's been in years past. I'm not denying that. But what I am trying to convey very strongly is that the mainstay players in the market, they're still there. They're still doing that. The crime of 1873. I mean, when the Eastern establishment decided to go to a gold-only standard, they had more control and silver was demonetized officially, although really it did circulate, and the law was changed a few years later. But it really took a lot of emphasis out of silver as money to gold only as money. And that's been true from that time really forward. Of course, silver circulated as money in the United States through 1964. And no one really thought about it because there's really enough, because basically it was coinage and change, really. It wasn't like people even thought of silver as a way to save for the future. It was just money of the realm. So when it changed, and Johnson basically said, silver's too valuable to be money. Wait a minute, money's supposed to be valuable, so we're going to start making these Johnson slugs. It came in subtly. No one made a big deal about it. Some people understood what was going on. I was one of them as an 11-year-old kid, but many of the adults just blew it off, didn't understand it at all. And of course, in the 70s, a few years after that happened, 1968 was the last year you could take a silver certificate and actually get silver for it. And after that, that was closed down. But it just basically needs a generation to not see silver as coinage and being valuable, for everybody to have a new mindset that, silver is not money, it's industry only. Who cares about it? It doesn't mean anything. And all those type of ideas that have been, put out for a long time. And it's only other nation states like India, you're not going to give them that idea. They won't buy it. Yeah. They've seen the rupee, as a worthless piece of paper all the way through. So they're going to buy silver and gold. Latin American countries, not as nearly as much as India, but there are parts of the world that understand the paper game, and there's places that don't. And so it's kind of a battle as far as, what is sound money? Why is it important? Is it tied to freedom and liberty? Does it really mean anything? Or is it just a bunch of, eccentric old people that are called silver and gold bugs that really aren't with the real program? And of course, as a precious metals guy, there's so much behind the story of precious metals that has nothing to do with precious metals. It has to do with an ideology and a political system that's based on control, and that's monetary control that affects everybody on the planet. And that's the big picture, and that's really my focus.
Silver's recent surge reflects a powerful intersection of constrained supply, relentless industrial appetite, and renewed technical momentum. Despite the lack of widespread retail enthusiasm, the metal has managed to defy gravity, holding firm above key thresholds and drawing attention from seasoned market watchers. Yet, the foundation of this rally remains fragile without broader investor participation. As global trends favor decarbonization and digital innovation, both heavily reliant on silver, the question isn't just about how high prices can go, but whether this rally can evolve into a structural revaluation. What happens next may depend less on speculative fervor and more on a deeper recognition of silver's strategic value in the modern economy. Will this renewed momentum in silver finally capture the confidence of long-term investors, or will its reliance on industrial strength alone prove insufficient to sustain the climb? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.